It's Brian Shannon from alphatrends.net. Today's Friday, the 2nd of October, 2020. Hope you had a good week of trading. The market was mostly higher here this week. Oil lost some ground, as did the bonds and, of course, energy stocks. Let's take a look at the action here. This is the week that we had right here. It was pretty low volatility. We gapped up on Monday and kind of battled with the volume weighted average price off of the all-time high here in the S&P 500. We are still holding above the 5-day moving average, and today when we saw that gap lower, you see that it got caught by the volume weighted average price from the low. So that 332 level is the level that I've been telling subscribers we want to keep an eye on and see the market close above this week. We did do that. I view it as constructive. If we get below and hold below 332 to 331, then we might have some other concerns next week. But for now, I'm going to continue to give the benefit of the doubt to the buyers overall because we're in a primary uptrend. Now, skeptics will point to the fact that we still have a declining 20-day moving average. That can be worked out next week pretty quickly, and the 50-day moving average is still rising. As for the Nasdaq, we did close pretty much right on the 50-day moving average, and let's look at the 30-minute time frame. That's where we can really make the most sense of this. You can see we closed below the 5-day moving average, so that gives us a little bit of reason to just say, let's slow down and see what happens here. It's not bearish unless we're making lower highs and lower lows below a flat to declining 5-day moving average. So the key level next week, I think, is probably, let's just call it 273 down to 272. If we get below and hold below that, then you're going to want to take a much more defensive posture. There are still opportunities in the individual stocks that I talk about each and every day for subscribers, and we've seen some big ones here on this video as well. Last week, of course, I was talking about the shares of AAXN, which had a tremendous week here. Let's look at the daily time frame. Real nice move in there, as did Apple. SPT I put on Twitter. It's really not doing a whole bunch. I also put on FUV, which really didn't get beyond this little high right here and failed today. Let's go back to the rest of the market, though. The Russell 2000 did outperform this week, but it's right at the 50-day moving average, and the pattern here is we have this high, we have a lower high, and then we have a lower high so far, and we had that low and a lower low. So I'm looking at this as a rally into a potential area, the 50-day moving average, where it could fail. So be careful with it. It's been a mess, as we know. The volume weighted average price off of that peak, let's just change that to red so we can see it a little bit better, and you can see we're right at it. I don't really see any reason to be bullish about new positions in the Russell 2000. If you're in it, that's a different thing. That we do still see, however, like I said, lower highs and lower lows. Now, maybe we can get a shakeout and then move higher. That would be the best bullish scenario. Certainly not to chase here, but to wait for a higher low, and then if we saw strength, then we could buy it and set our stop underneath whatever ends up becoming a new higher low. The semiconductors added some strength this week, and you can see they gapped up on Monday as well, held on to their gains better than the rest of the market, but still closed below the week-to-date volume weighted average price. That's that blue line. However, above the volume weighted average price from this low. This has been a little bit of a band of resistance initially over here, turned support, and we're back below it. So it kind of tells us that the light has gone to cautious. Now, the volume weighted average price from the low, you can see we're just above that, and the volume weighted average price from the peak at 171.5. I think that's the key level for next week to keep an eye on, that if we can maintain above that, we avoid disaster. But if we can bounce off of it and then rebuild, maybe we see more highs. The strength of semiconductors has shocked a lot of people over the last several years, really, and they continue to show the path of least resistance is higher, but we always have to be aware of the possibility they can reverse. So that's why we're aware of these key levels, and we don't want to buy when we have this kind of cautious tone. Now, the biotechs are still trying to rebuild here. They did what I wanted them to do, which was to pull back and now hopefully they can create a higher low, and maybe next week the biotechs can start to outperform. If we look at this little band of resistance, if we get back above that, well, guess what? We'll start to see that 50-day moving average flattening out. The 20-day will come up through that 50-day moving average, and this group has had a good digestion of the gains from this breakout. So we saw the breakout, of course, in the first quarter or second quarter of this year. We pulled back and tested it. It's appearing as though it's a successful test on the longer term weekly chart that we see here. And then over to the daily time frame, we're rebuilding. It's possible accumulation before the next leg higher. So do keep an eye on that biotech in particular. Financials rallied right up to the volume weighted average. Well, first of all, as we know, they rallied from the volume weighted average price from that March low. And that was what we were looking for, a bounce from there. So we got that bounce. Now, we're not out of the woods, though. We still have a declining 200-day moving average. We still have a declining 20 and 50-day moving average. I don't want to go near the financials, rather. There's the volume-weighted average price off the peak, and we have this prior band of support. So, if it gets back above and holds above 2475-ish, then it turns more neutral, but I don't think it turns it positive. It turns it to more neutral. Couple stocks to keep an eye on next week. I like Grubhub here. Grubhub, you can see the volume weighted average price off the weekly chart. We're holding above. Over to the daily time frame, we've got that 20-day moving average curling around and turning higher. Over to the 30-minute time frame, you can see the volume weighted average price off that peak in August. We're holding above with a rising 5-day moving average. So, I'm telling subscribers what to do on this each and every day for our time frame. I also think you want to keep an eye on mRNA. Here's a biotech that the 50-day moving average is declining, and it came right up to where it was supposed to this week, right up to the volume weighted average price from the peak. So now it pulled back from there. If it can then, kind of rebuild in here a little bit and then break beyond that, mRNA might be one to keep an eye on. OTRK, here's one that pulled back, great strong move right to the rising 50-day moving average. And here's the volume weighted average price off of that peak. If we take a look at the 65-minute time frame to drill down on that volume weighted average price from the peak, you can see that we closed above it today with a rising 5-day moving average. So over to a 15-minute time frame, we can see that with greater detail. Getting back above today's high, maybe with a stop somewhere down near 63, perhaps OTRK could be heading for a test of these highs. And then what you would want to do is sell some if it breaks out, because you don't want to be the guy or the woman who buys after a move from 60 to 80. You want to sell to those people if you get positioned properly. Anyways, I look at ideas like this every day for subscribers. Follow me on on Twitter at Alpha Trends, and I share a lot there as well if you're just watching this on YouTube. Have a good weekend, everyone.